Hi everyone. Today let's talk about Michael Burry and his next big short. We talked about him before, but let's get into a little bit more detail. Then of course we'll get into all of the charts as we look for the end of year rally or not. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So looking at Michael Burry's next big short, he did close down Sign Capital, and we talked about that before, right? But he is still doubling down on this potential placing. The next major mispricing in markets is still this AI bubble, which I do agree with. I do think there will be an eventual collapse of this kind of thesis, but for now it is still super bullish and we're kind of riding this bubble. But he believes it is going to be a bubble and that we'll see a bigger breakdown in these structures. But for now, that hasn't really happened. Maybe we've seen the early stages of it. We've kind of been watching that as a potential thesis on the channel for the last couple of weeks. But you also got people like Clifton from Clifton's research noting that people are expecting far more economic importance out of this technology than likely can be provided, at least in the near term. These technologies are very good for some things. Microsoft got a little bit ahead of themselves trying to use it for too much of their coding, and then most of their structures started to break down within their Microsoft Office and other programs that they have developed. A lot of the code became broken because they were trying to use too much AI to write that code and write new code, and that started to break down. And now they're going to have to potentially reverse course to try to fix some of those, or at least go back to some of the code that they had before that was working well. So they got a little bit ahead of themselves. Is that kind of a metaphor for what we're going to see across markets? And you can see historical warnings, a lot of parallels to the dot-com bubble. We talked about SPX divided by M2 getting into very similar ranges that we saw in that same kind of area. I would say there's definitely more value and more actual economics happening on this side. People buying GPUs and all of these chips to try to run AI. That's absolutely happening, the hyperscalers. But they've spent huge amounts of money trying to win this AI race. And are they getting actual revenues from this? That's the big question, which I'm not sure is necessarily happening, right? NVIDIA exposure, we've talked about this, and they have been taking a bigger hit recently in that kind of competition space. Is the competition for chips going to spread out more, and they're going to start to lose this massive dominance of basically 90% of the market when it comes to chips? Are they going to start to fall? Are we going to see a widening out of this AI thesis, especially on the AI user side, right? Where we have Gemini, XAI, Copilot, all of these AIs, but are they actually going to make revenue? Are they actually going to be usable for these companies? That is still very much unproven. Ultimately, I do think they will be, but is it in the next 5 to 10 years? Is it in 1 year? We don't really know, but what we do know is that they're spending a ton of money, and Burry has once again positioned himself on the cautious side, looking for that bubble to burst, and it would be almost comical if he was able to spot 2 of these bubbles in his lifetime, which should of course be once in a lifetime style issues. Moving over to Fear and Greed, we finished the week at a 24, pretty big up week considering the little bit of volume that we got during the week. Not a ton of volume on it, but you can see we've been downtrending. We hit kind of a critically low level. Can we get a nice rally out here over the next couple of weeks? It does seem like that is potentially the case after this week. Momentum back into neutral. Didn't tag that level. Would have liked to see a tag of that level and a bounce off of it. Didn't happen. Strength still basically flat here. Extreme Greed, Extreme Fear, Breadth also here at the 1,000 mark, right at that kind of 50 mark. Put call ratio moving down to 0.7. This has been trending higher. We didn't get a critically high level there yet either. Volatility at one of those kind of basing areas right at the low from here at the end of October. And then safe haven demand you can see, extreme fear basically at the 0 mark, and then junk bonds also in extreme fear. Moving over to the AAII survey here, you can see we did get basically a flat move here. Very little movement on the week. Makes sense with a short week with the holiday and not a ton of movement. I would have thought the bulls would have come in a little bit more aggressively and the bears might have got shrunk a little bit more aggressively, but very little movement, even with quite a bit of price movement. Moving over to seasonality here for December, you can see sideways choppy through the first half of the month and then rally into the end of year with that kind of January effect, kind of Santa Claus rally into the end of the year. So see how it plays out. A little bit choppy, a little bit down. Makes sense. We're looking for just a little bit of down early in the month, and then I would expect a little bit more rally after that. Moving over to the calendar here, first day of December, up 25 of the last 38, pretty good number there. And then you can see for the month, pretty good, up 13, down 8, up 14, down 7, and up 13, down 8 for the major indices. Pretty bullish really across the markets, and then bullish metric on the Friday with a bunch of unemployment data. Would expect little bit of down, maybe an up Friday, a little bit of choppy here, and then into that witching, we should be pretty bullish. You can see up 27 of the last 43. Not a great metric, but quad witching should be bullish. Moving over to the economic calendar for the Monday, ISM data, Atlanta Fed GDP continues to be really good numbers. Jerome Powell, potentially speaking, super late in the evening. That could be interesting. Tuesday, CPI data for the Eurozone, JOLTS job openings on Tuesday, and then looking at Wednesday here, not a whole lot, a little bit of soft data, global services PMI, non-manufacturing PMI, and prices. And then looking at Thursday here, continuing jobless claims, and then for the Friday, GDP for the Eurozone, inflation data, core and headline CPI data. And then we should get jobs numbers. I wonder if this will come out midweek, if it'll be added to the calendar, but it's not on there right now. Moving over to Max Payne here, you can see Max Payne, not a lot of options in here, just a couple of thousand. It's not a third week options expiration, so wouldn't expect a ton. But you can see the puts way down here at the 590 and 600 area. Huge numbers down there. Wouldn't expect to get anywhere near that, of course. But for the SPY charts, there's a lot of flexibility. This could go all the way down to 650. This could go as high as maybe 700. That would be crazy. I don't think we'll get anywhere near that necessarily, but there's a lot of flexibility between kind of current price, the 680 area, and as low as that 650 area. Moving over to the charts, looking at the S&Ps here, you can see this continuing to be super bullish. Big head fake on the touch of that 21 EMA, but we haven't seen a touch of that 21 in a while. And you can see here, when we had this rally previously, it could be like this, where you just get a bigger continuation, continue to highs. But you can also see here where you had a bigger pullback, kind of looks like this very similar setup in here from the end of December, early January, touched that 21 EMA, got a big up week, kind of consolidated right at the highs here, kind of what we would do over the next 2 to 3 weeks, kind of sideways choppy, fits with that seasonality potentially. And then once we kind of top out here, then you start to see that bigger breakdown into the beginning of the year, which would actually fit almost seamlessly with the exact same timeline into the end of January, beginning of February time period. That would be pretty interesting to see that kind of repeat here. The other concern very much is this RSI, right? We dipped pretty decently low. We're right below that SMA. If we touch that SMA and then reject, that's going to be terrible. And you can see that consistent kind of short-term downtrend. Show you again here, high, lower high, potentially lower high here on the RSI as we continue to go higher, which means clear divergence. Eventually this will fade and break, but for now, this does look pretty interesting with that touch of this previous area here from that October timeframe. The 21 EMA, like I said, still in there at 65, 62. If it breaks out, then you're looking for this trend structure up here around 71, 71.50, potentially momentum stepping back to bullish on that candle, but the RSI fake out, that is the concern, right? So something like this where you get one head fake and then that bigger drop down potentially as well. Something like this as well where you get a bigger kind of dip low, couple of candles, and then you could get at least a little bit of a retracement. I would really like to see that retracement. I think we're extended short term. I would like to see a higher low setup, even maybe as low as this trend structure here. 66, 70 would be interesting. Hold that structure and then get that bigger push to those upper levels. And then looking at that SPY chart, right, we had this kind of downtrend structure here, high, lower high, lower high. We clearly pushed through that and closed above it on that Friday session. Of course, there was very little volume. Momentum is back to bullish though. Now what I would like to see is a retest in here around kind of 66, 667 area, between 667 and kind of 672 area in here would be perfect. Come in here, higher low setup, and then it would be off to the races after a push from that area, maybe even a little bit deeper, generate a little bit more buying pressure in here around kind of 660. That would be super interesting. But for now, this does look like a break of this structure and a bigger bullish move. But again, very extended on the short term. Moving over to that SPY on the Tasty charts here, you can see that up candle went to that second ATR band there. That is sitting at 685.50. That's right in line with this previous high, pretty close to it. Big volume on the down week. Volume on a pivot week usually means that that was a buy at the zone here and that we're getting a bigger continuation there. So that gives me a little bit more bullish thesis, very similar to this, right? Where you have a big down week, volume, big volume here, and then we ended up getting a very shallow pullback and then a bigger continuation out. If you get volume and a continuation out kind of like this here, you should expect this is going to run for a bit. And I think that's kind of what we're getting here. Not as big, of course, but you got a bit of a volume, bit of a follow through to the upside. Would expect more continuation there, and this could go all the way to that upper band around 700 and $1 or so. And that could go to about 701 potentially at that upper ATR band. Then moving over to that daily chart, don't forget this is still bearish conditions on the daily chart. We broke that structure here, went down to that 89 EMA on the daily chart, tagged that area, and then now we're pushing to the trailing stop right now, 692.06, right at this previous high. That is your trailing stop. If you hit that zone and reject, that is going to be catastrophic, but at this point, seems very likely that we could get into that area over the next day or two. Again, we have those zones that we're watching on the trading view charts, but either way, this still looks very, very strong. Got some gaps left in here as well. Moving over to the NASDAQ, similar thesis here, nearly 5% up on the week. It was a crazy move, way bigger than I would have expected. Momentum stepping back to bullish, same setup on the RSI, however, with that high setting up for a lower high, in my opinion. We got the SMA there sitting at 66.08. We'll see if that zone holds as an area of resistance. You can also see this downtrend line that we're watching on the NASDAQ came up to nearly a perfect retest of that downtrend line. If we hit that zone and reject, that is going to be catastrophic for sure. But that's what it looks like here. Breakdown, 21 EMA, retest of this area. If we get the rejection there, that's going to be interesting. Could still give you the lower high off of this trend here. That would take you down to 24,370 or so. That would be interesting. And then looking at the Qs chart, you can see that next zone of resistance, 624.90, and here could reject from there, which would give you still just a little bit more upside, about 1% of upside here, and then reject back down to the support area, 595.50, hold the higher low in here, and then get that bigger move higher. That would be quite a bit of volatility. Big move down, big move up, kind of still a pretty decent move. That would be about 4.5% lower to this zone, and then see what happens after that. Interesting. Huge volume on the sell, still a little bit of volume on the buy still. Think this could go either way, but of course in the short term still bullish. Moving over to the Russell here, you can see on the weekly chart, big up week, 5.5% right to that trend zone, right to this previous high area. Momentum stepping back to bullish, right back to that RSI. You can see that zone here. Clear divergence still forming while price is in this same area there. We're going to see if we can get through to this previous high, if we're going to get through there and start to push towards these upper levels, or if we're going to stall out in this kind of lower high setup potentially. If we did pull back, I would like to see it kind of hold in here around kind of 238 to maybe 241, hold this structure here and then get that bigger push to the higher highs. Very strong candle though, closed right on the high. Can't put a ton of faith in it because of that volume, but definitely something to look for as a bullish side trade. Big dip here, big rally out, 90% of the move or so. Are we going to get that lower high in here right around that trend structure, get the higher low, and then look for that next move to the upside? I think would be a really, really nice trade, but still expecting this to fade here just because of how extended it is in the short term. Moving over to the Russell here on the Tasty charts, you can see we're right in that zone towards that upper band. Missed the second band here on this current rally, but getting very close to that previous zone. That second band right now, 254.99, again, giving you a decent amount of upside potential into that zone. Would expect to miss the upper band, but you can see the volume coming through. Candle, next candle, big, massive confirmation higher. So there's still definitely buyers in the market. This still looks bullish for me. And that did take us to bullish conditions on the daily chart as well, getting through that trailing stop that was here at 248.25, closed above that level. Tagged it on the Wednesday, got through it on the Friday, and now are we going to get through to those upper bands? You can see these are still downtrending, which usually means we're going to get at least some level of rejection. You'd look for the higher low and then the bigger move up. Your trailing stop right now to the downside is 232.41. Would love to see it come into that area, tag that zone, and then get the bigger move higher. Then there would be a ton of upside in my opinion. Then moving over to the Dow. Dow was positive 3.16%, got through this trend structure here. You would be looking for this next one up around 492 or so, extending that out over the next couple weeks. We could get all the way up into the 500 range potentially, just based off of how strong of a move this was. I still think there's potential that we're extended short term and could see a higher low setup, bigger continuation into that area over the next couple of weeks, but for now, everything does look super bullish. Moving over to the equal weights, equal weighted S&Ps had a nice candle as well, 3% right to this previous high here. Momentum stepping back to bullish, RSI back above the SMA. You can still kind of see that downtrend. You can still kind of see this downtrend here with the high, lower high potentially, but it is above the SMA, which is bullish. And if we break out here, then we're going to be in price discovery, and that would be super bullish, of course. So that's what we're watching for this week on the equal weights. Moving over to the ratios here, SPY Russell and NASDAQ SPY, both of these did kind of what we expected, right? We had a big down candle, big confirmation candle down. So the Russell massively outperforming, would expect that to continue here with this kind of high, lower high structure here. Would expect a lower low, meaning that the Russell is going to outperform, which should be bullish for markets. That's going to be interesting to continue to watch here. And then look at that NASDAQ candle here, closed above the body of the previous candle, still below that 9 EMA there, 372. Would want to see this push up to here around 376, 377 area, and then continue higher. As long as those two things happen, we should be in a nice bullish condition. This Russell chart also a little bit concerning here, right? If this holds the retest of the SMA and bounces from there, that's going to be bullish for the SPY. That would give you a higher low and then a bigger push. You're kind of in no man's land with the high, lower high here, low, still potential for a higher low, but would expect this to continue through. And then bearish momentum still here on the NASDAQ SPY. And then you can see that Russell, huge peak area, big pullback, lower high setup would be the expectation. And then the bigger breakdown just based off of the current technicals. Moving over to the SPX divided by the M2 money supply, you can see we're back above that 3014 level. The all-time high is at 3271, back from the dot-com bubble. So we're continuing to watch this momentum. Bearish RSI still showing that same kind of setup with the high, lower high, potentially lower high here with that low, lower low. And you would look for a lower low off of that structure ultimately, but of course things can change over time. Are we going to get that higher low setup and then a bigger push to this next zone, peak out towards that all-time high from 2000, or is this the top already? We're going to get a structure here and a consolidation and a bigger dip. Moving over to the Mag 7, you can see this kind of left shoulder head, right shoulder forming, still looking at that kind of left shoulder zone here for that potential right shoulder push up to 379 potentially. Still looks like a high, lower high structure here, low, lower low structure here. Momentum did step to bullish, so that gives you a little bit of bullishness to potentially trade, and then you can see this kind of high, lower high here. Hit the SMA, rejected off of there. That is critically bearish. Do we come in, retest that area just a little bit higher and then continue lower? That's going to be very bearish if that does happen. And then you can see that clear divergence, right? You had peak RSI back here, lower RSI at a higher price action, and then we ended up breaking down structure for a month. Now we've retraced some of that, generating some selling pressure as this rallies, and then I think we'll get that bigger drop. But for now, it does look short-term bullish. Moving over to Apple and Microsoft. Apple, nice close above the level, 275.91. Record close, record highs here for Apple. Continues to look really, really strong. And then looking at Microsoft, caught a bounce off of that 466.57 level. We said we were going to tag that. Tagged it super early and then caught a strong move, 4.2%. We're right at the low here. With a low, lower low, are we going to retest that low? If we reject from here, that's going to be catastrophic. But if we can kind of rally up, maybe back to that 506 area, 21 EMA, VWAP all in this area, hit that zone and then break down, then that looks a little bit more sideways choppy, but still not great with that high, lower high potentially setting up. I still think we're going to get that. Momentum still very much bearish. RSI still very much bearish. Moving over to Tesla and NVIDIA. Tesla had a good week, up nearly 10%. Momentum still not really showing that same kind of bullishness. You can see bearish momentum. RSI still below the SMA, potentially going to reject from there, and then 450 would be that near-term target. If we can get the continuation, hit that zone, and then we'll see what happens from there. Can it break out and continue, or will it hit the zone of resistance and reject and give you another topping pattern? Maybe the start to a bullish triangle here with a low, higher low as we continue to test this level and then get the bigger breakout. That would be interesting. But for now, short-term bullish, looking for that 450 level. And then look at NVIDIA, bearish candle here, 1% down when everything else was pretty bullish on the week. Definitely looks a lot more bearish compared to everything else. Still think there will be buyers in this kind of 166 area, but I do think that this is going to continue to go a little bit lower. The thesis on NVIDIA has kind of shifted. There's definitely some more competition. They have the whole market right now, so they can't really gain any more of the market. If any of that market is taken away, which is kind of the broader consensus at this point, this will continue to fall. Moving over to Meta and Alphabet here, you can see Meta having a really, really nice week. I thought this might go just a smidgen lower. Ended up kind of stalling out in a no man's land between kind of 565 and 603 area, but if you bought the breakout at 603, that would be a nice move there. So you got a breakdown, got back above the level, pushed to the next one, continues to hold here at this kind of zone of trend resistance, this downtrend structure that we were watching. If it rejects from here, that's going to be terrible. If it can break out from here, then you're looking for a zone somewhere in this kind of 690 area. Structurally, this is still very much a downtrend, but this is a counter trend rally, and that can be pretty aggressive. You got room here between current price and that SMA on the RSI as well, so that could be pretty bullish in the short term. And then Alphabet, really nothing to say here, just continues to be an absolute rocket ship, 6.8%. Massive volume, everything continues to be huge. Moving over to Amazon and Broadcom, you got Amazon up 5.68% right to the level, 233. Again, if you're right at the level and it can hold the level, look for the breakout continuation. If it rejects from here, that's going to be significantly more bearish. This looks this looks like distribution to me. Consolidation here, consolidation, tried to break out back into the consolidation, but it could absolutely hold that level. Maybe this is turning into kind of a weird bullish triangle potentially. I don't know. It's right at the level. I don't love it. You could argue maybe this level should be a little bit higher, around 237. I don't know. 233 to me makes sense. Momentum, slightly bullish. RSI, slightly bearish right at the SMA. Peak high, lower high setup there. And then looking at Broadcom, massive 18.45%. Absolutely insane. Broadcom has been a rocket ship. Massive move here of about 180% since the April lows. Continues to be massively bullish, and record highs, all-time highs break out above the 400 level. Everything looks super bullish for Broadcom. Kind of the same thesis that is causing NVIDIA to sell. Maybe they're going to get a little bit more of the market share. Moving over to staples and discretionaries here, you can see staples pushing up pretty decently, 1.89%. Looks like a solid base off the 200. Bouncing here, 21 is going to be resistance at 79.62, but I think we can get through there. This looks really, really strong off this base here. Momentum bullish, RSI bullish, especially with the kind of risk off play that we're seeing. Discretionaries was also strong at 4.86%, got back above the level 235.85. Again, if you bought their candle break, you're looking for that next zone, 242.77. If it rejects from here, then you could look for that sell down to that next zone around 227, potentially. Momentum stepping to bullish, so that's bullish. RSI, lower high setups across the board, clear divergence from here to there as well. SMA sitting there at 60.46. Moving over to breadth, the part of the reason that I think this bullish move here might have a little bit more legs is because we did see a break of this structure here. You can see 20-day getting above this entire September block of candles, getting back into this zone here, which was much more bullish from April to May time period. Same kind of thesis here on 50-day, getting above this structure here, getting above this high here with this kind of base, hit a low, rallied out, really nice move there, momentum back to bullish, RSI back to bullish. So I think there could be a little bit more legs in it. I just want to see a slight pullback, give a little bit more opportunity, and then look for that bigger continuation. Moving over to 200-day breadth. Momentum, step into bullish, RSI right there at the SMA. Did get above it briefly, kind of like we did here, which ended up breaking structure, but still high, lower high here. Might hold this base. So far, looks pretty good, but structurally, this is not really broken the same way the other ones are, right? We were looking at this here, had a little bit of consolidation above the zone. That's what we had here, and now we're above it just briefly. Not necessarily saying that this is broken by any means. Still overall a downtrend with this high, lower high structure here. Got a low in, certainly could look for a higher low here. Is the higher low in already? That's a bigger question. I don't necessarily know if I believe that quite yet, but either way, this looks pretty bullish right now. Nice up candle, 12%. Looking for this to break above here. If it can continue to rally through that zone back into the 80s, that would be super bullish. But for now, this is still kind of downtrending, and it does just kind of look like a retracement. Moving over to the dollar. Dollar did push through that 99.83 area 2 weeks ago, and then this last week it did sell off from there. Momentum is fading. RSI still very much bullish, still holding well above the SMA, and I would expect this to get bought up either way, but the timetable for me is kind of short. Looking for this to rally. Need that 9 EMA to hold at a bare minimum 99.14 or so. Structurally, this is still bullish, but I don't like it nearly as much after this down candle. Still could be a low, higher low here with a high, higher high, but again, still don't love it as much, but still going to continue to trade this bullishly. Moving over to JNK and TLT, both of these had really, really nice weeks. JNK up 0.92, looking for this to continue through that level if it can. That's going to be super bullish, of course. Momentum bullish, RSI bullish. And then looking at TLT, it held structure here, positive on the week. Again, decent volume actually, considering pretty much the same as normal volume. Looking for this to continue through to that next level, 92.82. If it does, that's going to be super bullish here. I still think there's a possibility that this is a kind of low, higher low here. Just a slight hesitation in here, kind of held that level. Needs to get above the SMA, which it is just barely. If it can hold that, that's going to be bullish, of course. But overall, I still like these, but really want J&K to go higher and kind of give us that kind of confirmation up move. Moving over to volatility. Volatility did spike up to that area, 28.89 over the last 2 weeks, and now we've pulled back to a zone of support with a potentially low, higher low structure in here, holding that same kind of base area around that 16 area. If this falls to the 14 area, I would expect it to kind of chop in here, kind of like this. But if it stays elevated, kind of like this, then we're expecting this to kind of continue to build. And that's really the thesis, right? Consolidation, spike up, consolidation, spike up, kind of holds, spikes up a couple of times over the next couple of weeks potentially, before ultimately getting a massive spike in the coming months. And I think think that is where we're at right now, kind of early in these early stages in this kind of move here. Moving over to my accounts, I ended up down about $500, which is a bit of a bummer. I thought we were going to get the rejection from that area that we talked about, and then it just continued to rally through and turn super aggressive. I made a little bit of the money back on the up move, and I wasn't as aggressive as I should have been. Ended up getting a really nice rally on Friday, which again was a little bit more aggressive than I thought that it would be. But either way, made some money back on it, but lost money on the week. Really what I'm looking for is that lower high setup or some kind of structure where we're going to pull back and give an opportunity to the upside if we're going to get it. Otherwise, if we continue to kind of sell through, maybe a double bottom or a lower low, then we know that this is truly a top in the short term, potentially to the medium to long term. That would be super interesting, but either way, the way that it is right now, short-term bullish, despite being pretty extended. Let me know down in the comment section what you think of Michael Burry. What do you think of the markets? Is this a bubble? Is this the start of a topping pattern where we're just getting a really aggressive bounce off of that initial dip? We're going to get a lower high setup and a bigger structural break, or is this going to be a rocket to new all-time highs across markets? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.